Okay, everyone. I think it's appropriate to stay in this time frame with the S&P 500 just to show you what it keeps on doing, which is move to the upside. It's kind of obvious if you use volume profile. If not, you're kind of guessing, oh, this may be a bottom, this may be a bottom, but when you can actually see why it is a bottom, you can understand why we've had to move from 1068 to 1220 in what, 2 weeks. It's pretty incredible. So, going right into it, this month's volume profile, which I'll zoom in, it is, let me get some lines for you so you can see. So we have, oops, wrong line, sorry. 1 second. So we have the start of October into mid-October, and what has happened is, we sold off, in the beginning of the month, and we see the low that we've made, and now we are moving back up, and during that whole time, the behind price is the volume profile, and it's developing, and so as more and more volume perhaps gets printed at any given price, these blue bars will stick out more and more, and the heaviest traded bar will stick out the most and turn purple. So, what we're seeing now is just that. We are seeing that prices continue to rise, and we have a point of control, the purple line that's formed at the top of the range around 1185. And you can see the sideways consolidation on this 90-day 4-hour chart. But you can see why it's the point of control. We had some action off of it. You can see we had a little bit resistance here. It broke out and we tested this. And because it's the point of control, I thought this was a fair trade, and I mentioned that in the video, on that specific day. And, sure enough, that level held, and, we've seen since then 30 points to the upside. So to continue on, if we're looking at the bigger picture, we see the point of control for this entire composite, these last 3 months, form at around 1188 on the S&P futures contract. What that tells me is basically, there's a reason why this level held and we've bounced so nicely. This is showing me, other than the resistance that we're going to come into in the next day or so, this shows me that any pullback, I think buyers will be interested in this 1188 level. Let's call 1180 the line in the sand. We wait to see if price gets down to these levels. Will they bounce, and will buyers be there? And if they are, I think that's your move to the upside, and you place a stop right below. Because if this market does go higher, don't you think there's a lot of people, especially money managers, who've missed this move, and they're scared that the market's going to continue higher, and if it does, they're going to chase this performance into the end of the year. It's a given, and to be able to be a part of that as a trader of whatever skill set, it makes a lot of sense. So let's use that 1185, 1190 range as our pivot point, the point of control. And basically, in my opinion, if price stays above that, it continues to be a buy. Other than that, manage your risk, keep your profits tight, even though it looks like this market's going to break out to the upside. You don't want to be left holding a poor performing portfolio because you decided not to take profits. So focus on keeping those profits intact, but be aware of the opportunity that we may have in the coming weeks or so.